Hey guys, welcome back to the channel. Today is November the 11th. It is pre-session, and I want to talk to you about my favorite price action setup pattern. One that I actually look for, when I'm trading each and every day. Those that follow the channel and have been following for a while, you guys know that I trade the E-mini S&P 500. So I'm a futures trader by nature. But this same type of setup, same type price action pattern, you can find it pretty much on any chart, any market, whatever the case is. It's just all about looking for those opportune areas within the market when price is, looking at price movement. So I'm going to show you a couple of examples. I believe these two examples, just as reference, are from October the 28th. But when you find these high probability setups, they tend to be nice trades. Now, I'm a scalper, and I don't swing or position style trade. I'm sure you can do the same thing off of a higher time frame chart, like some people who may be a position or swing style trader. But I don't, I'm not looking to just stay in the market for, a couple hours or through a whole session, whatever the case is. Just once price gets to a certain zone, a certain area, in reference to, this price action pattern setup I'm going to show you. You can find these type of setups, again, like I said, on a higher time frame chart. So I'm going to go ahead and show you a couple examples right now. Both of these are in reference to supply zones. I trade supply and demand. That's a style of trading I do, but I am a scalper. That's my actual, I guess, I trade supply and demand. My style of trade is actually more so I'm a scalper. That's the type of trader I am. But simply I just follow price action, guys, and identify key areas of supply and demand and wait for the rejections, and I take my entries. But I'm all about my trading. Setups are all based on breaker structure for one. Okay, I must see a breaker structure. I want to see a gap that the market has created. Once it moves pretty quick through an area, meaning that it's created a swing maybe to the downside. And I'm going to show you a couple examples of what I'm talking about when I say swing to the downside. Creating an area of supplies, so a breaker structure, a gap fill area, where price will pull back to, and also more so a candle break to get me into the trade. All right, so a couple of things I need to see there in reference to my full trade setup in a sense. So we'll go ahead and talk about that. I'll show you the first example here. Again, both of these are from October the 28th. The first example being around about 10:30, 10:35 on October 28th, and the actual supply zone where price tap back into, you'll see it here. That's that rectangle box there. Okay, and I'm going to show you the pattern. Okay, we'll take a look at it. So this was from October the 27th, where that supply zone actually rested at. And if you pay attention to the market structure, look at the market based on price action, price was just making higher highs. It did kind of move sideways right here. It was consolidating right here before it actually started moving strong to the downside. So the pattern actually starts where you have lower lows and lower highs. Again, now this is off of a 12 range chart. I trade range style charts. I don't trade time based charts or volume based or tick based charts. And there's no particular reason why. I just started off when I first started trading ranged based charts. To me, they're just clean to the eye. Whatever works for you, use it. If you're a time based trader or tick based trader, I should say a tick based chart style trader. Then use your tick charts. If you're volume or time based, then you use whatever works for you. Okay. Again, range charts are just clean into my eye when I'm looking for setups. But outside of that, again, this is on the 27th. Price create this area of demand. Supply, not demand. I always have a tendency to say demand quicker than I say supply, but it's actually supply. Okay, supply is aggressive selling. All right, and demand is aggressive buying in zones or areas where prices moving pretty quick through. So, and you have to understand what's going on there. When you see price move pretty quick or create a swing and then move away from it pretty quick, most times, it's the banks and institutions are trying to quickly fill orders and move the market pretty quick. So, what we see here is price making lower lows and lower highs. Okay, paying attention to market structure, looking at price movement, and then price just kind of dumps down. Kind of moves, pushes hard through to the downside. But if you notice this area right here where that supply zone rests at, look what happened. Price made a low here, pulled back, made a lower low, and then it starts, kind of migrating or pulling back or retracing back to the upside. But it actually breaks this area of structure right here. Okay, and so it's making higher highs and higher lows, moving to the upside now. So when it does that, It then makes a new high right here, okay, at the breaking structure right here. But it turns back around and starts swinging to the downside. A little swing here, pull back, and then look at this. Look at this massive movement, or like I say, well, this is off of a lower time frame for me on the range charts, but this is considered supply, okay, aggressive selling. When you see stacked candles, like a lot of red candles, red candle, red candle, red candle, red candle, red candle, one after another, you have to think to yourself what's going on there. And there's a gap that's actually created here. And what I mean by an actual gap is where price, once price makes this little swing right here to the downside, I'm gonna kind of blow this up a little bit so you can see that little swing I'm talking about, because it's kind of a little sideways movement right there, more so like a little zipper in a sense. You know, price push down, pull back, and then quickly move to the downside. So this is the areas where mainly when you see price make movements like that, it's the banks or the institutions. They're trying to fill orders pretty quick. When they push down, pull back with a green candle, and then they push it hard to the downside. They're trying to fill orders within this area right here. And then an area of supply is created once we get a great push down to the downside with that aggressive selling. Leaving behind this gap right here. So if we pay attention, close attention to what I'm talking about when I say gap, let's move that down. You'll see this area right here to right here. See, typically speaking, prices, it should pull right back to this area here, which I call the neck, or, well, in this case here, we're talking about a swing to the downside. So this would be the bottom of this swing here. So the right back here to this area of resistance right here, price will push down and then pull back, but it didn't. So it created a gap. So which means that when price moved quickly to the downside, a lot of orders probably did not. You got to think about what's going on behind the screen, or behind the curtains, behind the closed doors, is that a lot of orders didn't get filled there. So as retail traders, if you understand what's going on there, you kind of want to wait for the price to get back to that area and see if it's going to reject that zone that now that it created the supply zone, and then look to take your entry short. And what you did, I'll show you that. We're going to take a look at it again here on October 28th, which was the next day. So price pushed lower. We had a structural break. We created this gap here and created a supply zone. Three things that I look for, okay? And it created, when you see price patterns like this, or setups in the market, you know, where price is making higher highs and higher lows, and then breaks to the downside, breaking structure, creating a gap. It's a price pattern, you know, a price, I call it, you know, basically a price action setup pattern that I look for. And the biggest component of that I like to see is that gap right there, because I know that more than likely that's going to kick off to be more of a high probability trade. You guys may hear me say untested. When I say untested, I'm talking about the same thing as a gap. Okay, so what happens then is price continues pushing lower, making lower lows and lower highs. And then we get over, now if you pay attention, it didn't pull back to that area until a full day later, you know, right here. We'll go into 28, and pretty much around the, what time was that zone created? Let's see. Yeah, that zone was created at 10:30 on the 27th. And then price turns around on the 28th, pretty much 24 hours later, taps back into it a whole day later. So then that's that zone right there. Price pulls back to it, okay? And then what happens is, what we're looking for is, because you see here now, that gap right there, price to close in or fill in that gap on its retracement back to that zone, and what you did, okay? So once it gets back there, basically what I'm looking for is more so a candle break to the downside, meaning price pushes up, red candle here, closing to the bottom end of this green candle beside it, and I'm going short. Now you have to be paid, as a trader, you have to be mindful and pay attention to what's below you as well, okay? Now just because price fills that gap and maybe trying to, you know, the banks or institutions maybe trying to fill orders, more sell orders, whatever the case is, just because it fills that gap, it doesn't mean we're going to get a great pushback to the downside. You got to pay attention to price action as price is moving back to the upside or retracing back to that area, because now you have support right below you, okay? So we have this area of support right below. So the moment I saw, you know, I knew price would reject this area, I did get in aggressive. But if you wait for a little break of this candle, price to start breaking the candle to the downside, you have liquidity below. So you got to say, okay, price left behind a small area of liquidity as it was moving to the upside here. It pulled back into that area of supply off of from the 27th. More likely it's going to reject that area. So me being an aggressive style trader, I go ahead and take my short entry, taking it back down to at least this area of liquidity, because Right below us, we have support just as well. So I'm taking it back down to the little prior swing low right here, and price does that. So if you get in here, say for instance around 64, price comes down to 59, whatever the case is, pick yourself up 4.5, 5 points, whatever the case is. And this is a lower time frame, the 12 range chart. So when I'm scalping from a lower time frame, lots of times you're going to get a few points off of each trade, whatever the case is. But the thing that I like about trading off a lower time frame, now I don't try to trade off of anything lower than that, like a 4 range chart. When I say in most instances, I don't recommend doing that. I will trade the 4 range chart sometimes if I see great moves or great setups on the 4 range, but I'm also following in the direction of a slightly higher time frame chart when I'm taking interest like that. So I recommend kind of not moving all the way down to a lower time frame chart, because you're gonna get chopped up a lot of time, and it's only gonna be like a few ticks of area of profit that you can actually trade from, whatever the case is. But yes, lots of times you see me trade from the 12 range chart, especially those that have been following the channel. If you're a newcomer watching the channel today, I tend to like to trade what's called pair charts and stay in confluence with a higher time frame. So I like to mark my supply and demand zones off of one chart, maybe a higher time frame, and then scale down to a lower time frame chart, wait for price to pull back to those same supply or demand zones that are marked off of the slightly higher time frame chart. And once price gets to it on the lower time frame chart, I'll look to see if we got some means of rejection and take a trade. But if you want to understand more about the pair chart strategy, basically, just using 2 charts together and looking for the same type of price action or same things that happen on both charts, pretty much marking a supply demand zone off a higher time frame chart, and then a scale down to a lower time frame chart, and then you want to see basically a break of structure, price pulling back to a supply demand zone off of a lower time frame chart. Now once it does that, you get the rejection, and you take your entry short or long, whatever the case is. If it's at supply, short, demand, long. But if you want to know more about those that type of setup or strategy that I use, then watch some of the videos on the channel, guys. You can go over, type in on the homepage supply and demand, and you can watch some of those videos there. But anyways, getting back to what I was talking about. So that was the first trade setup right there. And this, going back, like I said, is, to me, I like to see price action pattern setups like this, because to me, it's like almost a no-brainer that price is going to give me something each time that price taps into an area, especially when there's a gap there, because again, price moved quick through an area. It created a little swing, and then it moved quickly away from it, and more likely a lot of orders didn't get filled there. So, but there's another setup just like it above. So here's another one I'm gonna show you. Now this one, it was from I believe the 26th. Let's see, yeah, the 26th of October. Same thing happened here if you pay attention. I'm gonna show it to you right quick. Price started making this run to the upside here, making higher highs and higher lows. It broke through this area of structure right here, or this area of resistance right here. And as it was doing so, it was creating higher highs and higher lows. It pivoted, made a high right here, turned around, started making lower lows and lower highs to the downside, breaking through the structure as it was moving lower. But what do you see right here? Take a look. I'll blow it up. Made a low here, lower high, lower low. Pulled back, and then it quickly moved to the downside. Look at all those red candles right there. Leaving behind this gap from here to here, and price did retrace back to that area. So to me, when I see things again, that is, the bigger players in the market pushing the market, they're the driving force and trying to fill orders pretty quick, sell orders, and the market probably did not fill all those orders because they moved pretty quick away from the swing here to the downside. Okay, now you just wait for price to come back to that area there. And this is on the 26th, okay, of October. Price did not come back to that zone or that area until come back to that area until the 27th. We'll take a look at it. We'll keep scrolling here. We'll blow it up right here. Okay? So, price comes back to that area there when it taps into that zone there. Again, I'm looking for a candle break to the downside. And gotta follow price action, because at this point here, price is now doing what? It's making higher highs and higher lows to the upside. But we have areas of support below us. All right? So, again, we have a gap fill area there. We had a structure break and price leaving behind the area of supply. 3 things that I kind of, I look for. Price taps back into the area. For me, it's just a break of a candle to the downside, and I'm looking to take price where? back down to the previous area of liquidity or this previous area of support right below it, which is this swing low right here. Okay, so liquidity, swing low, that's an area where I know there's going to be where prices more likely is going to want to try to test. And you see it. It rejects that area. It comes down. It takes out that level right there, that area of support. They grab that liquidity, and then they push the market higher. Okay, so that's the one of my favorite price action pattern setups that I look for in the market, and that's a structural break. Looking for the primary key is I want to see some means of a gap in the market where price moved away from a swing pretty quick or away from an area, and it did not come back and retest that area or fill in that gap quick enough. And then at some point I know it's going to come back to the area. When it does, I just look to capitalize off the rejection. And if there's support right below me, then I'm looking to capitalize and take profit at that swing low, the bottom of that swing low where there's liquidity resting at. And that's all I want to show you guys. Pretty much show you what I look for. One of my high probability setups that I look for in the market daily, especially if I see that gap fill. But if you're interested, I do want to say this. And join our Discord. We're approaching, I guess, about 600 community members now. And the Discord is primarily where we as future traders, if you're a future trader, invite yourself in. The link will be down in the description portion of the video below. You can click on the link, invite yourself in, and it's free of charge. But it's just a place where we come together, collectively speaking as future traders, and share our ideas, our tips, hints, levels, zones, trade entries about the market. So if you're a future trader and maybe you're a newbie or someone that's new to trading and you want to join a great group of fellow like-minded traders that are future traders, come in, find the link down in the description portion of the video below, and invite yourself right into the community. I'll show it to you right now. Here it is. The market is now open. It's been open about 15 minutes now, and you can see our community members are already interacting with one another and discussing levels and zones of interest. Lots of us will share our trade entries, by means of sharing our charts, screenshots, whatever the case is, and we'll share our trade entries throughout the day. Like here's me, I'm sharing an entry. This is from a couple of days ago. I'll show you an example here, a trade I took. But if you're interested in becoming part of a great community, and if you're a futures trader, invite yourself in. Find the link down in the lower portion of this video, down in the description portion. Click on it, and it's free. All right, guys, that's all I have for you today. Hopefully you found some value in the content in this video here, and I will see you guys in the next video. If you're trading, please be safe in the market, and I believe that's about all I have to share with you guys today. Yep, I'm gonna wrap that up. That's all I have to share with you guys today. Actually, let me do one thing right quick, because I do have a couple of shout outs that I need to give to those individuals who are part of or just recently joined the Elite Channel Membership Program. Let me do that right quick. Now, if I mispronounce your name, please forgive me. There's a couple of newcomers who actually joined the Elite Channel or became an Elite Channel member on the channel, and I'll explain to you what that's about as well, guys. But the first individual is, I think, Laura Vay. I'm gonna spell the name is LOR space VA. The next one is Adam D. The next individual that signed up for the Elite Channel membership is TV Sweep or Swep. TVSWEP, and then the next individual we have is Shava Nava, and then the next individual is Pontus Harden. Okay, so thank you guys for just recently, I see that you guys just recently joined within the last day or two. Appreciate you joining the Elite Channel Membership Program. If you're someone that's interested in becoming an Elite Channel membership or becoming part of the Elite Channel membership, what it is the YouTube tier membership program that you can join by simply clicking on the join button from the home page on the YouTube channel, or the join button on any video page, and basically you'll receive perks and rewards. But one of the biggest reasons why most everyone signs up for the Elite Channel membership program or the Elite Channel member tier is because they receive the trade breakdowns. When I post those trade breakdowns, it pretty much gives you a clear-cut walkthrough of my in-depth thought process behind why I took trades, and I'll walk you through those trade entries. So it is help. I found it to be a better means of, I guess, a way where people can identify and understand the setups and what I'm looking for, because it does break down step by step the trade entries and what I'm looking for as I'm going to take those trades, whatever the case is. So if you're interested in becoming an Elite Channel member, all you have to do is click on the join button again on the home page, or any video channel or any video on the channel, and basically for the price of a cup of coffee, $6.99 a month. But you receive a lot of great value in the content, especially in those private or exclusive videos that I post on that side of the membership tier. Again, that's the elite channel members tier. So thank you for everyone who has joined that program and supporting the channel. And that's all I have for you guys today. I'm gonna wrap it up here and see you in the next video.